Welcome to this week's Money Metals podcast, helping gold and silver investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the company voted 2015's Precious Metals Dealer of the Year in the U.S., Money Metals Exchange.
This is Mike Gleason with Money Metals Exchange, and it is my great privilege now to be joined by Jim Rickards. Mr. Rickards is Chief Global Strategist at the West Shore Funds, editor of Strategic Intelligence, a monthly newsletter, and director of the James Rickards Project, an inquiry into the complex dynamics of geopolitics and global capital. He is the author of two best-selling books, most recently the New York Times bestseller The Death of Money, and before that, Currency Wars. He is a portfolio manager, lawyer, and renowned economist, regularly appearing on CNBC, the BBC, Bloomberg, Fox News, and CNN, just to name a few. Jim, it's a real honor to have you on the Money Metals podcast. We really appreciate you taking the time to talk with us today. Welcome.
Thank you, Mike. It's great to be with you.
Well, you've just completed a new book called The Big Drop, How to Grow Your Wealth During the Coming Collapse. I've been reading this over the past few days now, and it's simply terrific, and I urge everyone to check it out. There's so much eye-opening information in here. I want to start out by asking you about a chapter that I found particularly fascinating, the one titled Today's Currency and Financial Wars. In that section, you wrote about the recent financial war we've been waging against Iran and the potential backlash that it may cause with Saudi Arabia and thus the stability of the petrodollar. What is America up to with all of this? Because you outlined the potential for a very scary endgame for the U.S. in that situation.
Yes, thanks, Mike. That's a great question, and thank you for mentioning The Big Drop. That's my new book. Now, it's only available through the newsletter, through Strategic Intelligence and Agora Financial, so it is available to interested parties, but it's not for sale on Amazon or bookstores, so there's a certain channel to get it, but it's out there, and again, thank you for mentioning it. And what I do in The Big Drop, among other things, is update some of my previous work on financial warfare, because we're in the middle of a financial war. We are in a financial war with Russia right now. We had been in a financial war with Iran in 2011, 2012. I talked about that in my second book, The Death of Money. In December 2013, the president declared a kind of truce, if you will, or détente with Iran. So suddenly Iran is our friend. Russia is still our enemy. China, we're kind of watching warily. But these are all ongoing financial wars in different stages. They're either active in the case of Russia, potential in the case of China, or there's a little bit of a timeout in the case of Iran. But they all bear watching. You know, investors have a difficult enough time as it is today because of uncertainty about Fed policy. I describe this as being on the knife edge of inflation or deflation. You know, people say, well, which is it going to be? You know, if you have inflation, I know exactly what to do. If we have deflation, I know exactly what to do. So what is it? And the correct answer is it could tip either way with all the money printing and monetary ease. And if there's a sudden loss of confidence, inflation could come up very, very fast, very quickly in extreme ways as it did in the 1970s. But given technology, demographics, and debt deleveraging, we could be in the grip of deflation, which we haven't seen really since the 1930s. So it's a very difficult world just because of those dynamics. When you throw financial warfare on top of it, and just to make it a little more challenging, some of the financial warfare is being fought out in cyberspace. In other words, you can do a lot of harm in cyberspace. I think listeners understand that. One of the threats is you get into the operating software of a major dam somewhere and open the floodgates. You can kill possibly hundreds of thousands of people by flooding downstream locations. So that's a case of using cyber warfare to take command of what we call critical infrastructure and cause a lot of damage. And then we've talked about financial warfare also. Talk a little bit more about that in a second. But imagine combining the two. Combining financial warfare and cyber warfare, where you would actually go into the operating system of a major stock exchange and start spoofing orders, sell Apple, sell General Electric, sell all these major Dow stocks or leading stocks, and cause the stock market to crash. And if people think, well, that's far-fetched or it's a fantasy, my answer is no, it's not. In 2010, the FBI, Department of Homeland Security, found a Russian attack virus inside the NASDAQ operating system. Now, this was not some criminal gang trying to get your credit card or your account numbers. This was actually Russian military forces using. They actually have a 6,000 person cyber brigade, if you can believe that, kind of waging full-time financial warfare. By the way, the U.S. does the same thing, but part of the point I make is there's an asymmetry. So let's say Russia can shut down the New York Stock Exchange or the NASDAQ. Let's say America is equally capable, so we can shut down the Moscow Stock Exchange. Well, who wins? In other words, the Moscow Stock Exchange is irrelevant. It's just not an important stock exchange, but of course we all know how important the NASDAQ and the New York Stock Exchange are. So there's an example where even though our cyber warriors are equally capable, the Russians are very good and we're very good, the damage is asymmetric. We suffer more than they do. So that's one of the trump cards they have. And then you sort of apply that in normal kinetic space, physical space, where you've got obviously what's going on in Ukraine with heavy artillery and tanks and armor. So warfare is no longer confined to the physical kinetic battlefield. Hasn't been for a long time. I mean, we've seen the development of sea power, air power, space power, cyber power. Now we're seeing the development of financial warfare. So the state of play right now is we're in a financial war with Russia. Our status with Iran is one of détente, obviously related to the president's desire to get this nuclear agreement in place. Let's see if that happens or not. They just blew off one deadline. My guess is they'll blow off others. What the president really wants to do is just run out the clock till 2016 and dump this in the lap of whoever the next president is, be it a Democrat or a Republican. So the White House today is just playing for time, and of course nobody's better at playing for time than the Iranians. So none of this is going away quickly, but my only point to investors is you have enough to be concerned about with the depression we're in and the inflation-deflation tipping point and uncertainty about Fed policy. But here's one more thing. Good reason to have gold, by the way, because gold is not only a safe haven. I mean, gold holds up very well in dangerous times. I think listeners understand that. But another reason I like gold is because it's a non-digital asset. Physical gold, you can't hack it. You can't erase it. You can't get into the operating system and make it disappear. So that's, in addition to the normal safe haven demand, one more reason to have gold that I like is the fact that it's a physical asset, not a digital asset, so it's not really susceptible to all this cyber warfare that's going on.
Expanding a bit on and examining just how vulnerable the United States may be, you participated in the first financial war game held by the Pentagon a few years ago, and as you've described in your writings, you've obviously got some real intimate knowledge of all of this and the kinds of things that keep some of our governmental officials and intelligence and security personnel up at night. Expand on that experience, and then also what do you think are the greatest risks we as Americans face when it comes to the current state of the global monetary system?
Sure. That war game I described in chapters 1 and 2 of my first book, Currency Wars, so happy to talk about it right now and kind of give the listeners a little color. But if they're really interested, they could get Currency Wars. It's out in paperback and give a much more detailed explanation. But just to give a little color, this was the first ever financial war game ever conducted by the Pentagon. Now, of course, they do war games all the time on various scenarios around the world, and they should. It's good to think ahead and think about threats. That it doesn't necessarily mean something's going to happen, but you need to be prepared in case it does. But back in late 2008, early 2009, the Pentagon decided that they wanted to do a financial war game. I was invited to do two things. One, help design the game. It had never been done before. We did this at a top-secret weapons laboratory halfway between Washington and Baltimore. We had about 100 participants when all was said and done, a very large war room type environment with, almost something out of a movie like the movie War Games or Dr. Strangelove or Fail Safe, if you remember those old Cold War type movies. But that kind of environment with large screens on the walls and a lot of computer software and different sections broken up. And so we had participants certainly from the uniformed military, civilian, Pentagon leadership, the CIA, the FBI, Department of Treasury, representatives from the Fed, Department of Homeland Security, a lot of think tank people, professors, and some Wall Streeters like myself. So it was a very eclectic group of people. We did it over the course of 2 days. But we had to design it because, you say, well, it's like writing the rules of any game. How long would it last? What would the teams be? What would the sequence of moves be, et cetera, and then allow that to play out in real time, which is what we did. So then I also got to play in the game, participate in the game. I was on the China team with a few colleagues, and then we did it over, as I say, a couple of days. Now, the main thing that I did once the game actually started is, with the help of some colleagues who were on the Russian team, we cooked up a little plot in advance. Didn't tell anybody. I said, well, let's make this as realistic as possible, so we'll have some back channel plotting in addition to what goes on in the room. And we came up with a plan whereby China and Russia would pool their gold reserves, put it in a vault in Switzerland, and create a bank in London. And this bank in London would issue a new currency backed by the gold in Switzerland. We had to use London and Switzerland because we knew no one would actually trust the Chinese and Russians in terms of keeping an eye on their gold. But the kicker was that they announced that Russia, henceforth, if you wanted Russian natural resource exports or Chinese manufactured goods, you could only pay for it in this new gold-backed currency. And if you wanted some of the currency, you could either earn it by trading with them and running a surplus, and they would pay you in it, or you could put your own gold in the vault in Switzerland, then the London Bank would give you some currency, and then you could use it to trade with China and Russia. Now, obviously, this was an effort to run the dollar off the road and basically eliminate the dollar's advantage as a kind of hegemonic global currency, which it is today. Now, nobody thought this was going to happen the next day. This was not something that was going to happen right away, but we wanted to, as I said, give the Pentagon their money's worth and let them, look into the future a little bit. Well, it was interesting. The reaction was partly one of ridicule. We certainly had Harvard professors and other very distinguished analysts kind of laugh at us, say, what's wrong with you guys? Don't you know that gold is not part of the international monetary system? It's not a monetary asset. It never will be. Why are you wasting our time with this, etc.? But we said, hey, it's a war. Anything can happen. Let's just play it out, and had some support in the room. And finally, we did play that out. It played out in very interesting ways over the course of a couple of days. And again, this is all in the book. Our listeners are interested in reading more about it. But here's the bottom line. We did this in 2009. We were pretty much laughed at, even though we played it out. Since 2009, Russia has more than doubled its gold reserves. They've gone from about 600 tons to about 1,200 tons, and they're adding more all the time. China has increased its gold reserves by a factor of 3 or 4. They've gone from about 1,000 tons to some number. No one knows the exact number because they don't disclose it. It's a state secret. But there's enough information from Chinese mining output, Hong Kong imports, Shanghai Gold Exchange transactions, and other sources. There's enough information to infer reasonably that China now has 4,000 or 5,000 tons, perhaps more. Every time I've updated my estimates of Chinese gold, to the extent I've been wrong, I'm always wrong on the low side. I pick a number based on analysis, and then I get better information, and it turns out the number is actually higher. So it does seem that they're on their way to acquiring 8,000 tons, try to put themselves on a par with the United States. So having said all that, here we were kind of ridiculed in 2009, but since then, Russia and China have behaved exactly the way we predicted they would, which is they're acquiring massive gold reserves. Who knows what their next move is, but it could take a lot of forms. And again, my view of the Chinese situation is simple, which is China's acquiring thousands of tons of gold. One of two things is true. Either they're stupid or they know something we don't. I spent a lot of time in China. I have a lot of Chinese friends. They're not stupid. Therefore, my assumption is they know something we don't. If buying gold is good enough for the Chinese, it's good enough for me, and I think that's reason enough for investors to own some.
Talk about how you see things playing out here. I've read that you feel the most likely outcome may be the launching of a global currency by the International Monetary Fund. What about that, and what about gold possibly reasserting itself?
Well, it's a good question, Mike, but just to kind of frame it a little bit, I'm not talking about the launching of global currency. They already launched it. What we're talking about is the special drawing right, which is just a fancy name for world money. They call it the SDR, but SDR stands for special drawing right. It is world money. They give it a sort of a geeky technical name because they don't really want people to understand what it is. Another good example of that is our central bank. What do we call it? Well, we call it the Federal Reserve System. Why don't we call it the Central Bank of the United States? Well, the reason is that Americans hate central banks. We've had two central banks in the past, in the 18th and 19th centuries, and we abolished both of them. So when they started this new one in 1913, they didn't want to call it the Central Bank of the United States because they knew people didn't like it. So they gave it this technical name, Federal Reserve System. But, of course, it is a central bank. Well, the same thing with the IMF. If they launched a currency and called it world money, That would be kind of spooky and scary to a lot of people. So they call it the special drawing rights, so nobody would know what it was. But it is world money. That's exactly what it is. But there's nothing new about it. It was created in 1969, so it's over 40 years old, going on 45, 50 years old at this point. There are hundreds of billions of them outstanding. They were issued at various times in the early to 70s up to 1980. Then there was a long hiatus, the period of what I call King Dollar, from about 1980 to 2009, almost 30 years, when they did not issue any. And then in 2009, in August 2009, they issued a very large amount of SDRs. No one noticed. I noticed because this is kind of where I spend my time doing research and what I focus on, but didn't seem to attract a lot of attention at the time. So, just so the listeners understand, this has been out there for almost 50 years. There are hundreds of billions of them already outstanding, and they issued some during the crisis in 2009, and they will issue more when we get to another financial crisis. So there's nothing new about any of this. But it is new to a lot of listeners because, they haven't heard about it. It's been kept under wraps. Now, this world money, this special drawing right, it's not something that you and I are going to have in our pockets. This is not walking around money. There are not going to be paper versions of it that we take down to the grocery store. We'll still use U.S. dollars. But the point is the U.S. dollar will be turned into a local currency. It'll be like, when I go to Turkey, I buy some Turkish lira. When I go to Mexico, I buy some Mexican pesos. And when people come to the United States, they'll get some U.S. dollars. But it'll just be a local currency. The important things in the world, when I say important, I'm talking about settling balance of payments between countries, the price of oil, maybe the price of some other global commodities, the books and records of the major multilateral financing institutions, regional development banks, and perhaps the generally accepted accounting principle financial statements of major corporations like General Electric or Siemens or SAP or Volkswagen or Sony, et cetera, will all be recorded in SDR. So it'll be kind of a big boy currency unit of account. We won't have it in our pockets, but the impact of it will be to create inflation that no one knows where it's coming from. In other words, you'll be able to bail out the world, reliquefy the world, and create inflation by printing SDRs, and you'll see the inflationary impact when you go to buy groceries or whatever. But Fed and the Treasury will say, hey, it's not us. It's those guys over at the IMF, but of course no one even knows where the IMF is, let alone where this inflation is coming from. So it's not a secret plan. I like to say the IMF is transparently non-transparent. What I mean by that is they actually tell you what they're doing. And you can go to their website. You can none of what I'm describing is inferential or invented. You can just go to the website, and this is all there. But no one understands it. It's like reading. If you're not a cell biologist, you're not going to read a cell biology paper with much comprehension necessarily, and so if you're not an expert in your international monetary system, none of this is going to make a lot of sense, although I try to explain it in plain English. But we're going to be hearing more about it. The big event this year in 2015 will be that the price of an SDR is calculated by reference to a basket of currencies. Now, there's a lot of confusion about that. People say, oh, it's backed by a basket of currencies. Well, that's not true. It is not backed by anything. It's not backed by anything, but the value is calculated by using a basket of currencies. And so the currencies currently are the U.S. dollar, the euro, the Japanese yen, the Swiss franc, and pound sterling. So the issue would be, do you include other currencies in the basket? And it looks like later this year they're going to include the Chinese yuan, which will obviously be a big step forward in terms of China's plans to compete with the U.S. in terms of global financial dominance. So look for that later this year. So you're going to be hearing a lot more about SDRs, but the one thing I would say is this plan has been out there for almost 50 years. There's nothing new about it.
You've just heard part one of an explosive two-part interview with Jim Rickards. Don't miss the must-hear conclusion to my interview with Mr. Rickards, which we'll have for you next week. But before we go, I want to tell our listeners that we have lined up a way for you to get a copy of Jim's new book, The Big Drop, How to Grow Your Wealth During the Coming Collapse. It's incredibly extensive and chock full of fantastic information, but it's only available online through a special offer. Below this podcast is a link that enables our listeners to sign up for the book, along with a risk-free trial of Strategic Intelligence, Jim's newsletter that you don't want to miss. I strongly encourage our Money Metals customers and all podcast listeners to jump on this opportunity right away. You won't be disappointed. Well, that will do it for this week. Thanks again to Jim Rickards, author of Currency Wars, The Death of Money, and now The Big Drop, How to Grow Your Wealth During the Coming Collapse, and the editor of Jim Rickards' Strategic Intelligence newsletter. Check back next Friday for our next weekly Market Wrap podcast, including part 2 of our Jim Rickards interview. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great Easter weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.